All right, one last point I want to talk about. I promise to talk about hedge funds, because this is one of the, one of our buyer pools, very large buyer pools for our deals. And let me explain hedge funds. Hedge funds are simply private funds that are not registered with the Securities and Exchange Commission, as opposed to mutual funds. You're probably aware of Fidelity's mutual funds, Vanguard's mutual funds. There's hundreds of mutual funds out there. These are investment funds that are registered with the Securities and Exchange Commission. Hedge funds are just simply private funds that attract funds from high net worth investors, and managers of these hedge funds invest those funds into projects. Now, the managers make money by something called the 220 rule. They earn 2% management fee per year. That means they take all the funds under management and they pay themselves 2% of that total amount as a management fee. Plus, they earn 20% of the profits generated by their investments. So, hedge fund managers are looking for two things. They want a large pool of funds to invest, and they're looking for projects that are going to generate high profits because they earn 20% of the profits. The one thing about hedge funds, they only utilize accredited investors. They utilize accredited investors, which means they're high net worth investors. Now, these hedge funds are forming now. They have formed, and they're seeking deal flow. They see these funds are also known as vulture funds, by the way, because they are circling, looking for these distressed assets, and they're recognizing there's a huge fire sale on real estate in commercial multifamily apartments in the United States, and they're looking for these deals. Now, their deal flow, they want deals of $3 million and above. The minimum deal they're going to look at is $3 million. So they are a great source of buyers for our deals that are $3 million and above. For example, I have one student who identified a hedge fund. They were seeking 1,500 apartment units. So what did he do? He simply positioned himself between that hedge fund and apartment deals, and he created the deal flow to feed to that hedge fund. It's like, for him, it's like shopping for deals where the money is already raised, because they told him the profile of deals they're looking for, and he's out shopping for those deals across the country. Here's a huge opportunity I want you to recognize, though. Deal flow attracts big funds. Your ability to show not just onesies and twosies deals, but your ability to show a stream of deal flow is what's going to make you very, very attractive to these big hedge funds, because they are hungry for deal flow. They want places to place their funds. So that's really the big business opportunity, and that's why I created Apartment Wealth Factory, is to take the deal flow created by my students across the country to feed to the hedge funds, because they love deal flow. And the ability to demonstrate a continuous stream of deal flow through Apartment Wealth Factory is what makes them very, very attractive. So that's the same opportunity for you, is creating that stream of deal flow. That's the story on hedge funds. Now, again, it's going to be on deals $3 million and above.